Where's everybody? Market gets a little iffy and everyone's, they'll show up. I have no doubt. Good afternoon, John. Good to see you, sir. Welcome, everybody, to the Tradespoon live trading room, stocks and options closing bell. My name is Scott. I will be your host. A little bit about me. There you go. Oops, sorry. Okay. Little bit about me. Get started. Let's just start talking about it. Let me get this out of the way. Sorry, the GoToWebinar was being a little funky on the intro here, and so yeah. All right. I'm going to minimize this, bring this up, and here we go. You came off the golf course. Well, how was it? How's the weather? How are you swinging? What's going on? Market started good, sold off, came back. A little iffy here towards the end. S&P is down 0.5%. The Dow only 0.08, the NASDAQ 0.95, the Russell 0.13. Okay. Stocks extend declines as April doldrums. April doldrums isn't a thing. You can't just say April doldrums. You can't just throw it out there like, oh, April doldrums. Oil down 3%. You can see it was down a little and then it just really came down hard. We would love to see, love to see oil and basic materials on some sort of retracement. What else? Citi says Wall Street is wrong about the Fed. Tesla asked shareholders to reinstate Musk's $56 billion. Oh, interesting. What else? The let's see. Trump's campaign follows the path of his media company. DJT. Oh, they got a day, but look at that, up 16% today. Up 16%. That is a lot of whipsaw. I don't know. At this point, I feel like it is. I feel like more likely dead cat bounce, and we're likely to head down towards this 18 to -3. Ooh, -3. That's phenomenal. I am a terrible golfer. What else do we know about this market? Okay. Okay, let's see. Can't putt. The news. The news today. We got the Bayes book. Markets seem to respond somewhat favorably. That came out, at noon? Yeah, I mean, the market seemed to respond favorably to the Bayes book, so that's good. Right? That's good. Whoops. What else? Thursday, tomorrow we have jobless claims, some Fed. Not much, but what do we have? We have earnings now. Earnings season. Okay. All right. That's what this ready next, but we'll start here. And the SPY. Stella does not like what she sees. Does not like it's just not looking good here. Okay, we'll take that into consideration. I definitely have regressed. My market posture dropped again. Overall, I'm still more bullish than not. But one more week and I'll be at the point where I would need to see, like, new confirmation from buyers, I would be open to speculative bearish trades. Right? I mean, I'm of course I'm going to adapt. We'll see. We'll see what this week brings. Give me your thoughts. Okay. 525. Is that your score, John? I am a 5. I dropped from a 6.75 to a 6, a 6 to a 5, and right now I would say I'm on pace for a 4.5. It's continuing, and that's when it's 3 weeks in a row. You're like, wait a second, this isn't just like a pullback in a bullish trend. This seems to be something else. Okay, great. Let's be ready for that something else. Now that we're saying to ourselves, hey, it's Wednesday. The next time I score is Sunday. And I'm saying, hey, it looks like I'm going to be scoring it down. And when I'm down 3 weeks in a row, that opens the door. Well, Stella says, yeah, the door should be open. There's confirmation to that. There's some whatever we think may come from the cyclical, and we do look at it. It's the last thing we look at, which means it's the lowest priority. We would love, right? We would love for that to have happened. But if it's not going to happen, we're not going to be like, oh, we're going to keep hoping it. We don't hope. We trade what we see. Let's see if there's more confirmation of that across the other broad indices. Very similar from the NASDAQ. Okay. We look at IWM. Very similar from the IWM, and we look at the Dow, and a lot of negative momentum, we'll call it. Negative momentum projected. That doesn't mean we just dive in. I'm saying, right, we have to watch and see, do we get a little bit of an upswing? If we get a little bit of an upswing and then it starts to roll over again, yes. You got to trade it differently. You're not hedging anymore. The VIX, if you hedged, I would imagine you still have at least some of your hedge still on. And if so, you'll be glad based on the market dropping and the volatility rising. That's just a core part of what we look to do. X back here, right? This wasn't a higher low, but this did break a consolidation. If you're able to put that on relatively early, you still were on by 16, but that's it. If you're not hedged by 16, it's a much more difficult thing. You can still do it if you think, but here's the risk you have. If this thing pulls back here and goes like this and turns, and you put a hedge on, and then all of a sudden we get some good news and this happens, that last hedge that you put on when the ball was higher at 18, and then you put on the hedge and the price goes against you and the ball goes against you, now you're getting you're going to give back so much on that you wipe out the other ones. And remember that a hedge is only if you have a bunch of bullish trades on, which I have to imagine that you don't have a bunch of bullish trades on. That more likely you've been closing bullish trades, taking profits or taking losses, and have smaller amounts, so there's less to hedge. But if we get this signal, percent out of the money 5 weeks out in time, no, that only exists basically at or under 16. We don't do that when we're at 18, 19, 12. We don't do that anymore. What do we do now? Well, now I have to do something else. Now I have to do a bear call spread, or possibly a broken wing butterfly where I weight it to the downside a little bit, but still construct it so it can survive well in the middle. I mean, there's some things that I can do to try to help. Less inclined to probably, I would say, I would actually maybe even say a bear put spread, maybe a debit spread, where I'm going to eliminate the. I'm not going to be theta positive. I'm going to be theta neutral, or at least theta minimal. But in exchange, I get vega minimal, and that's what I'm hoping for. I want to take volatility out of the equation, so that way, if the market goes against me, I'm going to control my loss better than I would if I bought a put. Buying a put when the market goes against you, it's a double whammy. It can really be hard to quantify the loss in advance. So just keep that in mind. Okay, so yes, here were some hedges. I would imagine this will be an interesting one to see what happens. If the market has one more bounce in it, that's what it's going to look like here later in April. I don't know. We may just move right into summer where we're like until the Fed connects until the Fed brings forward the interest rate cuts, the market may just stall out for a little bit. And that says we're hoping that the economy sustains until the interest rate cuts come. Right? That's the thought. Okay. No cuts, John says. Okay. I'm still going to go too. I'm going to say September, December. September, December. That's my thought. And here's the deal. I am in line with the market. And so far, the market has been dead wrong. Dead wrong. I mean, this dates back to November when we had like a big surge in the Russell, you'll remember. And it was when like now we're lucky if we get 0.5%. But at the time, there were some overblown expectations. And we saw it get priced in, right? And we're like, oh, maybe we get one in March. We never thought January, to be fair. We never thought January. I thought that March was doubtful, but maybe hopeful, and that it would have been June. Wait, no. Do I have that right? Let's go look. June, yes. So I thought May. Yeah, no, I thought May could have been, but then I'm like, no. I quickly moved to July, but now you can see. So here's May, 96% against. In June, 83% against, the highest it's been right now. In July, 55% against. So it's more than 1-to-1 against, even in July. The first time we have expected favorability, and it's not quite 2-to-1, is in September. And then at that point, there's only 3 meetings left, and my thought is they're going to hit it once and then watch it to see what happens. Because if things start to go, if they're in a spot where they're like, okay, we're going to do it, right? We're going to do it. They're going to give it at least one session to really see what the impact is before hitting it again. So my thought is September, December. We'll see. We'll see. Here's today. Chips are getting beat up. AMD, I've been getting ready to kick it off my list, and that's probably its last straw right there. Chips are being beat up. Microsoft is holding up. Apple, Google, Meta, not terrible. Financials, I'll tell you, financials have gotten beat up a little bit, so they've got a little bit of work to do to reestablish themselves. Consumer looking a little better. Industrial's a little tepid. Utilities are super strong today. That's we got to be careful that we don't see a defensive shift into utilities, but that's what we have going on now. Everything I believe we did. Let's go get a quiz. How's everyone trading? Have you sustained? If you took losses, were they small? last couple of weeks, even prior to these last 4 days, yeah, we've already slowed down. Right here, it was really starting. We're like, okay, everything was still looking pretty good, but we started to slow. And then here you can see a little bit of acceleration. We've broken the 50. We did have volume on the day it broke. I believe that my scoring component where I look at volume, we've broken the 50. And we're down here. We're right back at the lows. Things were looking okay, but look what's happened. We surged, and then we shot here, and then this is some crazy volatility going on right now. All right, let's get this quiz going. Carmen's calling it out. I'm going to put it right across the bottom of this crew here. A, B, C. ABC. Dennis is an A. He was fast. And Carmen is a C. She's not liking what she's seeing here. I actually am going to join Carmen as a C. At this point, I think we may be seeing a bit of an intraday dead cat bounce. And after these sellers really just like came swooping in, and I think they're going to make a run down here to the low. That's my thought. I'm a C. I've only got a couple of answers. Give them to me. Come on. I'm going to leave the. Oh, no. Shit. Shoot. Come on. Down here, it was, I believe it was like this. A, B, C, and that's where I think. Okay, so wasn't as clean. I wish they had an undo on drawings, or maybe they do, and I just don't know how to use it. It's quiet out there. I hear crickets when I should be hearing A's, B's, and C's. A's and B's and C's. SPY. Okay, let's see. We're going to go intraday. Stella's going to be a B, it looks like. 501.27. 501.27. Oh, yeah, she's a B. Okay. So Dennis is an A. Stella's a B. John, Scott, Carmen, C's. Where's everybody? I know we got more of you that want to put your gold medal. We're still on it. Angelique's an A. Fair enough. She's an A. That's it. All right. Closing the window. Last chance. Going, and gone. I'm all dramatic, and I can't find my tools to erase it. There it goes. It's gone now. Okay, let's step back. Oh, I'm a C. Yeah. I'm definitely a C. What do we want to talk about first? Where are we from a retracement standpoint? 524.61. We got down today to 500. Divided by 524.61. 4.7%. 4.7%. Consolidation. That's consolidation. My concern is if we are entering a correction. So right now we are thinking, now this is about 5%, right through about right there, 5%. The correction's when we get a double dip where we say, oh, it comes up a little bit, and then we dip again, and we drop down. And where is the correction going to be? Let's find out. 524.61 times 0.9, 472, 471, 2. Does it sometimes accelerate in speed the second hit? That's why I'm saying, if it's going to be a correction, we have a window. This isn't a hedge anymore. If you get a higher low on the VIX, you're not like, I'm hedging. Hedging what? Market's down 5%, potentially going to go down 10. Maybe you're hedging some long-term positions, but you're probably I don't know. Maybe if you have long-term positions, maybe you're hedging those individually or as a group, separate from your speculative. If I see something like this, I'm looking to speculatively trade it to let's jump in. Let's find a couple of things. Right, and there's going to be a little opportunity. What's pointing to that? Number one, the fact that this correction here is now different than this one back here. This was a sideways consolidation. This is where, this is a little different now. So it's a little more subtle, but we've got to see that just what we've seen in the last 4 days has really made this start to, even back here, it was very similar. It's what we've seen now that we're like, wait a second. Oh, right? Tell me if I'm wrong. Tell me if I'm wrong. Because I want to be bullish. I'd rather be bullish. Of course I would. That's an easier market. Bullish, low volatility markets are always the easiest to trade. Always. You'll make more money in those markets than any other markets. So you should want that if you don't. Of course I want that, but it's not if the lawnmower is right over top. No, now I don't want sunshine now. I want to stay ducked. Don't stand up. Relax. Wait till the lawnmower passes. Then stand up. Then get the sunshine. Relax, blade of grass. So this puts us down near 470. Okay, so let's correlate that then here with the SPY back to the short term. Stella says 479, April 30th. We say 470 by May 10th. Very similar type of a prognosis. And you might think, well, Scott, your posture's bullish. You're a 5. I am. It's built to be that way. It has to be. So it's always going to be a little slow. Remember that the fact that it's bullish doesn't mean I can't take bearish trades. I do whatever I want. Tell me what I can do and can't do. Market posture. Boss, see 3 weeks of drop. That's what I'm focused on. It's not going to turn negative until we get worse than a correction. Then I'm thinking bear market. Now I'm thinking 10% to 20%. What can I do with that? And if we cross that 20-25% mark, bear markets will hit 50. Those are whole different conversations. This is the only conversation we need right now. Do we think that this 5% correction has the ability to become a 10%? Do we believe this 5% consolidation has the potential to become a 10% correction? If yes, there is opportunity setting up on the table. Period. Is there still bounce that we might see coming here, whether it's tomorrow, the next day, then or somewhere in this area? Is there still a chance that this thing might catch and then all of a sudden, boom, you get a little V and you're like, bam. Yeah. Yes, that's a possibility. Probability or possibility? Probability, I would do it, bigger. Possibility, one or two trades where I'm like, yeah, let's find the best things and give it a shot just in case. I want to kind of spread myself around a little bit in a market like this. Everything with, now we have what? We have some vol again, options traders. We have some vol here. So now what? Now we can sell, we can build some ranges where we're like, okay, I've got this. So if I do one of these, if I do a bullish trade, I'm not going to like buy a call. buy expensive calls and have to be right. No, I'm going to do a broken wing butterfly where if it goes sideways, I'll be fine. I'll make money still on a broken wing butterfly. And if it goes up, I'll make money. And I have high vol and I'll have time on my side. So how you trade right now is important. Now that this extra little bump we have, as you look through our weighted volume, overall, here's the deal. It could pull all the way back to that 10% mark. And my that's 470, right? So I'm going to erase these lines. Look, if you think I'm crazy, put it out there and say, hey, Scott, here's why I think you're crazy. If it comes all the way back to 470, that's right here. That's a pretty big consolidation, right? I would rather not see that if we're going to think the long term is going to continue from here. I would rather see us start to stabilize sooner than later, because a correction from the long term, that's kind of a lot of a retracement all the way back down to here. Now, overall, still a higher low. That would still be a higher low, right? At that 470 mark. Let's draw it in. Let's say we just kind of keep on pulling back in, and maybe it jiggles a little bit. It comes down here and it gets to this mark right here. Oh, and it starts to turn. Well, yeah, I've got this like this, and now I've got these highs going like this, and now what do I have? It's a broader range, but that's my new long-term trend. Really, it looks, I would say, very similar to the red, right? Do you agree? So I would still say that's a positive upward trend. I could live with that. But there is short-term opportunity that would exist even in that long-term pullback. And none of that would shake long-term bullishness, in my opinion. I would never go negative on that. It's just a correction. Okay. I feel like I'm monologuing today. Give me some action here. I think we've talked about everything in here. Let's go look at our watch list. Whoa. Okay. Let's start with Apple. Oh, so Apple was like, here we go, and it broke out. But at this point, to me, it's almost, I guess you could still barely argue that it hasn't gone all the way back down yet to this lower area. I don't know. Makes me feel like Apple still isn't quite ready yet. And with earnings here, it may or may not have an opportunity, but maybe you like this. It had let's pare this down here to like an hourly chart. You might look at this support level, especially it's kind of pulling into that there, because this one came out of nowhere. There was no higher low. It was coming down, and then bam, it took off. So maybe you zoom in to build yourself a little bit of a different perspective on your trade. AIGs that have broken through the 50, that are now feeling like they're more sell off and less pull back, right? Is it a pullback and then it pops, or is it a sell off and it's a little bit more extended and pronounced? And we're seeing more of that now. So that's why we're a little bit more cautious. We're adapting to those conditions. AMD continues to drop. I really think I'm going to kick it off the list. It's just turning into a bit of a dog. Amazon. I actually think Amazon looks quite nice. It's pulling back. If it stabilizes anywhere, I would say at or above like 176 to 180. Ball is high though. So what does that leave us to do? Well, and I don't have a lot of time before earnings, but again, I could do a short-term broken wing butterfly. I'm going to build that one maybe here if we have time. I'll take a look. How do I know it's 4 days? We're watching the percentage where you can see this is about 9 points, 8 points on a $180 stock. That's less than 5%. That's in that 3-4% mark. We watch the volume here. You can see the volume is declining as the stock drops. So this is what we would say is a pullback. It's pulling back in the context of its trend. Versus if we see something like this. Now what? Well, now look how long it's been going. 1, 2, 3, 4, 5, 6, 7, 8, 9 days versus 4 days. And it went from 79 to 71. That's 8 points. On a 78, that's a 10%. And look at what happened on the volume. The volume didn't decrease. The volume is increasing on the sell-off, especially the last few days. So that's where you think, oh, yeah, I'm more inclined to look at that as a sell-off and less inclined to trade this. Whereas with Amazon, I'm still inclined to call that a pullback, subtle, but hopefully recognizable. Let me know. Sitting above the 50, but you got earnings coming up. And I just think you overall holding the 50, holding on to the 50. Boeing is down. Earnings are coming up. BAC trying, but under the 50. It's trying to get back. It's seeing what it can do. It survived earnings. I gotta say, at this point, I'm more inclined. I'm more inclined to want to see something like this, where we bust up, pull back, and then catch it, right? Where we pop up, come back, and then regain for the next big move coming out of this. Because I don't know that we're done yet. Citigroup, you can see, broke down. Question came in about the stochastics on AIG. Remember that this cannot make it a buy if the trend, if you're not convinced that the buyers are in control, this cannot be a buy. This can only be a buy when you say, I am convinced that buyers are in control. So when you have a sell-off, are you convinced buyers are in control, or do you need to see a little bit more? So I would say no, be careful. If that were a pullback, like, ooh, maybe we need to wait a little bit more. Does that make sense? Remember that the stochastics is literally the very last thing that we look at in establishing whether or not we're big today, but I still think it's setting up. So I still think you need to be ready for that. Costco, iffy, sideways, CrowdStrike, meandering down, Delta. I mean, I'm not confident enough to put a bullish trade on that now, right? Not for me. Delta is just kind of sitting down. Bitcoin. Ooh, so Bitcoin seems to be breaking its triple top on volume. And you're thinking to yourself, what triple top? Scott, what the hell are you talking about? 1, 2, 3. Although this is actually very close to a pattern called the shrunken head and shoulders. You might say, I've never heard of that. That's because I invented it. You can see that there's actually a slight dip here in between these two. So it's not quite a triple top. It's actually the legendary and elusive shrunken head and shoulders. There's the base of said pattern. And we are now breaking that base on what appears to be a slight increase in volume. So it's ominous. It's ominous, and I would say next target for me on this would be 45. You heard it here first. Bam. Okay. GE. It's staying fairly bullish, but I mean, you've got earnings in a few days. Vol is high. Gold up high. Google looks okay in setting up on a flag, but you've got earnings. So you got to decide, do I have time to catch this thing? IWM is down. Small caps are kind of feeling it. Meta looks fantastic. If it weren't for earnings, I would have no hesitation be looking for a trade on this. With earnings, it's a little bit more dicey. Your vol way, way, way up high. Yeah. Okay. They had great earnings last time. Could we gap down? All right. I'm gonna. Okay, we'll come back to that maybe. Microsoft sitting on trying to hold the 50. Micron still looks pretty bullish. Netflix sideways. Earnings. Some industrials that are starting to get sluggish. You can just kind of see it. Broke the 50. SMCI trying to bounce. SPY. Okay, we're holding up. Oh, okay. Look at that. A little back and forth. Looks like B might be right. That's what Stella said. B. Oh, I need my chart back. Come back here. Okay. TSM. Earnings around the corner. VIX. VIX is it's looking it's looking like an escalation to me and concerning. It could be pulling back right now for another couple of days. We'll see. But I'll tell you what, if it easily we pop up into this like lower to mid 23s, but if this thing really starts to, I wouldn't think the 30s. That's bear market territory, the 30s. We can have a correction here and see it get up into the 30s. But yeah, I would say there's still a good chance that this thing pops even a little bit higher still. Let's go back. Let's go to WM. Earnings coming up. Looks fine though. Walmart. I think Walmart is setting up. Mild pullback. We've seen a little bit of a resurgence in consumer discretionary, which is where Walmart sits. Yeah, I'm definitely paying close attention to Walmart in addition to oil. If the market is going to get into a little bit more of an adverse situation, oil, opportunity, consumer discretionary, opportunity, probably some utilities that we want to keep an eye on. You'll see here in a second as well. XLB. Okay. Materials have pulled back. That's nice. May bounce though. Communication services looks fine. Bouncing off the 50, ready to go, possibly. Energy looks like it's ready to trade bullishly. Financials, it's a little more iffy. It's broken the 50. It did it on volume, where it's a little more of a pullback, yada, yada. Industrial still holding on the 50, but showing some concern. We've seen this before, though, where it just kind of meanders, and then if it's going to catch this and bounce, great, let's be ready. Technology, broken the 50. A little bit cautious with that, but not much from staples. Utilities caught a little today, but overall, not much. Healthcare is down. All right. All right. What's next? Next is a broken wing butterfly, because I said I would show you one, because I think that's a nice potential trade if you're going to be, did I say Amazon? Okay, let's play with this a little bit. Let's go into Amazon. Tell me if I missed one. I'm going out to May. And I'm going to do $175. Okay, let's play with this a little bit. Okay. That's not a bad start. This is a May. Doesn't have enormous potential. Where are we? This is 175 in the middle. That's down here. Oh, no. Now we need to move this up about 10. Let's move this up 10. And this up 10. Let's maybe only move this up 5. Just to start. Versus if I go to 175, that's going to shrink a little bit. Boom. See how it drops down? So now, well, let's leave it here. This actually looks pretty reasonable as I look at it now. This is where we are. And we would be wrong if it broke the fifth. Let's just say maybe like 174, 173 even. 173 to the downside. That looks a little ugly underneath here. But we actually barely turn negative in time in that situation. As long as it stays above 178 is basically our profit zone. That's kind of our like bailout zone, but we're really looking for this to stay above 178. If it drops below 178, there'd be some concern. So what do I have here? If it's between 178 and 190, 178 is here. 178 to 190. So if it just went sideways and turned into a, like, that's our concern, right? Is that the market's destabilizing a little bit. So you're like, well, what if it doesn't go up? Well, if it did that, then this behaves like a butterfly. And as time ticks, you can see that purple line just sort of pops up and it starts to make some money. Now, it takes a while in here. So this is a trade that it's not a trade where we're like, oh, I'm going to just jump out of it. You're just going to sit until if it never breaks trend, you hold on to it and just let time do its job. Now, if it happens to make a huge bullish move, well, then at a certain point, it just gets where it's at max gain. But max gain is profitable. Max gain looks pretty good. Max gain is 1570. Our loss at our stop is only about 850. So that's about almost 2 to 1. And that's if it just sort of takes off with more potential in the middle. So that's what we have. We have so for bullish trades, I'm trying to be more careful so that if that bullish trade just grinds to a halt, great, I'm set up for that. 185. And now I've kind of built in. So now if it happens to make a bullish move, great. But if it stays between 174, now it's from here at 174 up to here at 187. If it is in this range, I make money like a butterfly. And if it breaks to the upside, I have a max gain potential for an upside trade. Now, so it's a probability trade for sure. Now you can see here that I'm risking 400, we'll call it 400 of risk down here. Now max gain is 575. So only a little better than 1-to-1. But remember what my probability is. That means if it goes down 3, it'll just sit and eventually catch up. So this is more of a probability trade. Why am I thinking about trades like this? Because we tend to see a lot of sideways activity in the summer. So you got to be equipped and ready to put trades on that can capitalize from that. If the volatility bleeds out, this is Vega negative. We make money from that. If it stays sideways, I make money from that. If it goes up, I make money from that. The only thing it can't do is crash down. I've got mostly covered. Up, I make money. Slightly up, I make money. Sideways, I make money. Slightly down, I make money. The only way I don't make money is down. So I would look at this as having 70% probability factor. I'd say even more, but just to be conservative with, the way that, then just do a butterfly and build it wide enough to contain it, right? Where you say 188. And you might think, well, what if it breaks out here? Well, if it breaks out here, I could actually add another. Then I could add a calendar spread to it, and all of a sudden, there's always something you can do with these. So, yeah, it's just a matter of being willing to put the trades on. So, where am I? I am increasingly cautious. I'm expecting my posture to drop a little bit more. We'll see what it looks like on Friday. I'm ready to potentially speculate to the downside if it seems like we're moving into corrective territory in order to capitalize on that. I'm thinking that if I do any bullish trades, I want to do it in a way that I still make money if things grind to a halt sideways, and I am taking advantage of the high volatility, making sure that my trading matches market conditions. What do you think? A plan? We have a plan? Any disagreements? Anything where you're like, I don't know what you're even talking about with that, Scott? Or do we feel like, okay, we're in an okay place? Like the flexibility. Love it. Love it. Okay, well, great to see everybody. I would like to invite you to have coffee with me on Friday morning. Let's plan on starting sometime around, I don't know, 9:15 a.m. Eastern. You have a link. You can just click on it. We'll talk about the market. We'll have coffee. We'll prepare ourselves for the weekend. It's up to you if you want to come or not. If you don't come, you'll miss out on some phenomenal things, possibly even when we solve the market completely. Good to see everybody, though, for real. Have a great rest of your day. If I don't see you, I'll see you next week, Dennis. As always, my friends, happy trading.